Multibagger stock Titagarh Rail System has skyrocketed over 270% in the past 12 months. Brokerage houses are bullish on the stock. Nuvama's target price suggests a further 22% upside, while Morgan Stanley forecasts a 28% earnings CAGR from FY24 to FY27 for the company. The wagons and coaches manufacturer has seen higher profitability and margins with an order book of over rupees 28,100 crore. The company, as we all know, is a leading manufacturer of railway freight wagons in the private sector and is now rapidly diversifying into passenger rail systems, including driverless metro trains. A critical supplier to the Indian Railways, this Kolkata-based company's operations have expanded to keep up with its diversification strategy, which includes the manufacture of Vande Bharat train sets, metro coaches, propulsion systems in the passenger railway segment. And joining me now on this episode of Know Your Company KYC on BTTV, Prithish, welcome to the show. Beyond the numbers, viewers, analysts, investors want to know about the company that they are invested in or propose to invest in. And sometimes when you have a flurry of numbers, a deluge of numbers, for the average investor it becomes a little difficult to decode what really is going on in their preferred stock and preferred company. Since we have you with us today, I want you to sort of talk about the big picture first and tell us about how you perceive the growth potential in India. The macros are very robust. The budgetary allocation for the railways segment is significantly higher over the past several years. There's a lot of core network development work that is happening, and this is all in the context of India's ambition to be a $7 trillion economy by 2030. Where does your company fit in this overall bullish macro picture?
So thank you very much. I think you started off with a very apt question. I think that over the last few years, and especially now, the focus of the government of India and of the railways is very, very clear that there is a very clear need to expand the railway network, whether that's on the passenger side or on the freight loading side. So, in multiple media interviews of the Honorable Minister of Railways, he mentioned that in 5 years there would be a completely waiting list free rail system. So that's a huge step for India. With that, that coupled with multiple announcements on the growth of the Vande Bharat network. So there are multiple announcements saying that they will purchase over 3,000 trains in the next few years. So these announcements really encourage us, and because these are not just announcements, we are seeing the work happening on the ground towards meeting these targets. So definitely on the passenger side, the outlook looks very, very strong for us. Now, if we talk about the side, which is a completely different segment altogether, there is a clear target of a freight loading of 3 billion metric tons by 2030. Now, with that target in mind and with the work happening towards that target, we see there is a year-on-year increase in the freight loading by the Indian Railways. So that coupled with the announcements in the budget of the new freight corridors, it gives us a lot of encouragement again that the demand on the freight segment will also continue to be very robust.
Very important 2 points that you have spoken about at the start. I just want to go back to the waitlist free India in 5 years. It's a clear headline and one that we have also chased in the past, because while we can land on the moon, send up satellites and rovers there, the issue of congestion on the railways, especially as far as the passenger side is concerned, long waiting lists, is a huge one. What will it take in terms of overall rolling stock growth on the passenger side for India to be waitlist free? And do you have any traffic passenger traffic increase figures also that you can share with our viewers?
So at the moment, the plans that the Railways has announced of procuring the new Vande Bharat trains, 3,000 trains to be added to the Railways networks, I believe that at this moment, that is a very fair estimate and a very good target to have, because we see over the last few years, a lot of work has been done on improving the infrastructure, on building tracks, and that work, in fact, continues even today. So, with all this in the background and procuring the kind of rolling stock that has already been announced by the Minister of Railways, Shri Ashwini Vaishnavji, I think that's a very good number and a very good target that the railways have set.
Okay. The other point is the where you see your company participating in this surge that we are going to see. Which segment for you, will it be freight or passenger or a combination of both that will be primary drivers for your company in the period that we are talking about?
So for us, I'll talk about 5 years in the future. So at the moment, our revenue split comes mostly from the freight vertical. Last month, in the month of March, we were able to produce 1,089 wagons, which is the industry's highest ever recorded production. And that's the run rate that we aim to stabilize at now, which is about 12,000 wagons per annum. Now, if we come to the passenger rail system side, there we have a serious potential for growth. We intend to establish a total capacity there of 850 coaches per annum. And once that capacity is established and up and running, we expect approximately 65% of our total revenues to come from the passenger rail system. Whereas today, almost, I would say 85 to 90, or if not more percent of our revenue comes actually from the freight rail system.
Okay, so that's a significant uptick as far as passenger contribution to your overall revenue mix is concerned. You spoke about higher production numbers. How will that kind of growth come from? Will it be through internal accruals? Are you going out seeking technology partnerships? What kind of investment is being put in to be able to deliver this kind of growth?
So we're not looking to go to the capital markets for any sort of fundraising in the near future. As you may recall, last year we had 2 rounds of fundraising wherein we went to the capital markets. And that, coupled with our internal accruals, should be more than enough to sustain the company for this next phase of CapEx. As far as the CapEx number is concerned, we had already announced that from a period of, let's say, 22 to 27, we'd be spending a total of about 1,000 crores in CapEx. And apart from what's already been spent, around about 500-600 crores of that remains to be spent over the next few years.
Okay. Are there any plans for newer collaborations? As I understand, you have joint ventures with a diverse set of companies, ABB, BHEL, Ramakrishna Forgings. Is there any other new partnership that is also in the works to deliver the kind of growth that you're talking about?
So we're a company that's very open and very supportive of the spirit of collaboration and of partnership. So while at the moment we have nothing that I can share with you, we are always very open to forming new partnerships and growing together.
Okay, that's a fair point. Until those partnerships are done and dusted, you can't talk about that. I completely appreciate that. Let me also get you to speak about a question that a colleague has suggested, that a recent contract with Gujarat Metro Rail Corporation for designing, manufacturing and supplying 72 standard gauge cars for the Surat Metro Rail. Try and provide us some color on this, and whether does this also mean that there are additional metro projects that you are considering for the pipeline in the near future?
Oh, absolutely. So the metro business, as I mentioned, the passenger rail system business is set to contribute about 65% of our total revenue. And the capacity that we're building of 850 coaches, the market demand is definitely strong enough to kind of exhaust that capacity, if I may. So as far as Surat Metro is concerned, the project is on track and we're currently proceeding with the designing of the metro. The prototype should be delivered by October of this year, October or November of this year, with the remaining trains to be supplied as per the contractual deliveries. As far as the future project goes, there are multiple tenders that are currently in the pipeline, and we ordinarily refrain from commenting on live tenders until they're closed or awarded. But I can say that there are multiple tenders in the pipeline, and the demand forecast looks very strong.
The Pune Metro, for example, or the Bengaluru Metro, without commenting about any tenders or work that is in pipeline, what part of India, which are the urban metro systems in India that you see will do well? What's your market analysis about the feasibility and the growth of metro projects? And I ask you this with the subtext of what's happening as far as the Hyderabad Metro is concerned. There are now concerns about its viability due to what is happening with ridership shifting to free bus rides. Therefore, from a market analysis point of view, where do you see India's urban metro growth coming from?
So from a market point of view, I think, one exception or one potential exception does not, make the rule or prove the rule. So I believe that on an India level, the metro market will be very robust and will continue to be robust for the foreseeable future, because we see a strong trend wherein tier 1 and even tier 2 cities are longing for some sort of urban transport, whether that's a metro or a metro light, or it's some form of urban mass transit. And, in the cities where there are metros already running, we see a huge demand for new lines coming up. So I believe that the metro market in India will continue to be very strong for the foreseeable future.
Okay.
And across.
Okay. Let's also talk about Vande Bharat. Vande Bharat, you have a very significant, I think, a 50% market share in the Vande Bharat segment that I have been given to understand. And currently, these trains are operational on nearly 50 routes across India, and then there's an expansion that the government is working on, and we'll have the metro, the chair car and the sleeper. What kind of overall opportunity does the Vande Bharat segment provide for your company, and how do you sort of see it panning out as far as the overall rail network in India is concerned in the years to come?
Sure. So I think our Vande Bharat order is for the sleeper type. For Vande Bharat sleeper trains, 1,280 coaches, which is 80 train sets in a 16-car configuration. And we are one of the two entities that have been awarded this tender. So the other entity is a collaboration between RVNL and a Russian company, TMH. And the other bidder or the other technology partner in this project is a consortium between us and BHEL. So as far as the potential for Vande Bharat goes, as I mentioned just a little while ago, sir, the Vande Bharat market looks to be extremely strong. And that is supported by the plans and the vision of the railways and of the government of India to really reinforce the rail network. So we believe that going forward, Vande Bharat trains will be the future of transportation in India. And we are very confident on a robust market for the Vande Bharats.
Okay, this is quite interesting, and it's very clear that the structural transformation that the railways has been witnessing, Vande Bharat is very clearly the key driver in this regard. So we have spoken about metro plans, we have spoken about Vande Bharat as far as your plans are concerned. I want to turn the attention of our viewers towards the overseas expansion opportunity. You clearly have very considerable skills, capacity, knowledge and market experience for low cost, affordable engineering and manufacturing. Would it be fair to say that for investors in your company and other analysts that they could look at the export segment and seek that your company take a very serious shot at it?
Absolutely. I mean, the export segment will be one of our key focus areas. Let me give you some numbers here, some basic numbers. So if we look at the value of a freight wagon versus the value of a passenger coach, Now keep in mind that both of these items occupy the same volumetric space, but a wagon costs about 35 lakhs, whereas one metro coach is about 10 crores. So when you ship these two items abroad, the percentage of cost of shipping on the value of the good is almost negligible on a metro coach, whereas on a freight wagon, it would be rather substantial. So, it's not just the engineering costs and the manufacturing costs that work in our favor, it's also factors such as this. And we definitely look at the export market as a very good potential market for us down the line. In fact, we've already started working on it through an export order that we have for converters for the Lazio Metro that we will be supplying to Italy. So we've already started working on the export market, and going forward, it will definitely be one of our focus areas.
Okay, that's a good detail and noteworthy fact that you will be exporting to Italy. Let's also talk about your plans to set up a manufacturing facility for forged wheels, coupled with a significant order from the Indian Railways. What are the timelines here? How much money is going to be put in, and what do you expect from this initiative?
Sure. So we're in a joint venture on this project with Ramkrishna Forgings, which is one of the leaders of forgings in the country. And the JV company, which is Ramkrishna Titagarh Railways Limited, has an order for about 15 and a half lakh wheel sets to be supplied to the Indian Railways over a period of the next 20 years. So about 80,000 wheels per annum. And the capacity that is being installed is actually 2,20,000 wheels per annum. So 40% of the total capacity is underwritten by the railways for a period of 20 years. And as far as the timelines go, so everything is on track at the moment, and the factory should be up and running sometime before the contractual delivery of the first wheels, which is in June 2026.
Okay, we wish you all the very best for that. Let's go back to a question where you spoke about how in the export segment the percentage cost of shipping a coach is pretty much negligible. Once this whole plan pans out for you and the mix that you are changing fully stabilizes, what will happen to your margins? Which segment do you expect to drive your margin growth and the sort of contribution in the internal mix?
Sure. So in the freight rail system vertical, we expect a stable EBITDA margin of between 10 to 12% going forward. That may vary quarter on quarter because of the mix of wagons that we produce or how many we're supplying to the railways versus the private sector. But on an annual basis, a 10 to 12% EBITDA is a fair estimate on the freight front. Now, on the passenger front, today, we have incurred all the fixed costs, but the manufacturing is rather low because we're at the fag end of the Pune Metro project. That project is almost fully executed with only one or two trains pending to be delivered. So once we start manufacturing of the other projects that are currently in the design phase, and we're able to produce a level of 15 to 20 coaches a month, at that point, a 10% EBITDA to be a fair margin. And then going forward, as we move into backward integration, such as the propulsion agreement that we've signed with ABB for the driverless metro systems, with those we expect the EBITDA margins on the passenger rail systems to be even higher.
From a buyer perspective, and I'm just curious on this, what really is the motivation and the business logic for a driverless metro? I mean, for a supplier, you will design and manufacture what your buyer wants, but in the Indian context, what is the real sort of logic for a driverless metro?
So it is the safety, it is the quality, it is the ride index that the users receive. Because you see, a metro is effectively a public service. It's run for the benefit of the users. And the safety levels and the ride index and the quality of a driverless metro is, of course, higher than others because it's a newer technology. So, it's why one would switch out from an iPhone 10 to an iPhone 15 when there is no need to, but it's the same logic.
That's a good example, upgrading your phone. you know, I consider myself to be a keen observer of the railways also on account of people in my family having worked for and built the network and continuing to do that. But one of the things that I've seen from childhood, multiple gauges, standard gauge, and we have seen the metro systems now come in, and this question used to always come to my mind: why can't there be a seamless network all across India? Why do you have to have different systems that are where it's not possible to interconnect very easily? Now, of course, that has changed. I'm talking about many years ago. But given that metro systems will span over distances of greater than 70-75 kilometers, going up to even 100 kilometers, how will the shape of the passenger railway network look like in India maybe 10 years down the line, given the different systems that are all being invested in?
So that's a very interesting question that you've asked. And if I understand correctly, what you're asking me is whether the network could be standardized. The metros in India could be standardized to have the same system. Am I correct in understanding?
Absolutely.
So for that, it would be quite a task, because you see every city has its own requirements, whether that's in terms of the existing infrastructure, whether that's in terms of the ridership requirements, whether that's in terms of the road availability. In order to build a metro system, you have to ensure that there's nothing blocking the path of the metros. So every city has their own requirements that the metro authority of the city would be best able to comment on. And just for that reason, it would be difficult for me to comment today whether all the metros could be standardized or not.
Okay, that's a good point, because this was just a question as far as an aside is concerned, because very clearly the development of the Indian railway system and what was present many decades ago, that's going to constantly change. I want to also talk about what is in it for your investors. Those who have heard you describe some of the details of your operations now and who track you, look at your earnings very closely and overall regular business and news updates that come for you, what should an investor look forward to, given that your stock has given significant returns and you have a strong order book? What can they expect in the next 2 to 3 years?
So I think the next 2 to 3 years will really show the story of the passenger rail system. If you look at even the last set of numbers that we declared, the numbers for the passenger rail segment were quite muted on account of the finishing of execution of Pune Metro, as I mentioned. So the next couple of years will really show the growth story of the passenger rail systems, because all the orders that we currently have in already booked, for example, the Surat Metro, Ahmedabad Metro, Vande Bharat, and the Bangalore Metro that's in collaboration with CRRC, all of them would start execution over the next couple of years at different points in time. So the results of those will really be evident for the investors and for the market in the next few years.
And a comment about the order book as you have already outlined, and anything that you could share about a more medium-term outlook in that regard.
As I mentioned, there are multiple tenders that are live and multiple tenders that are spoken about due to become live in the next 6 years, 1 month, 1 year, or 1.5 years. So I would refrain from commenting at this point in time, but let me assure you that the market definitely looks very strong, because a lot of cities have plans to either expand or to build new metros.
One of the commentary that I was reading is the Morgan Stanley estimate about your valuation at 35 times the PE for FY26, and they say that this valuation is backed by clear earnings visibility and improving return ratios. Do you concur with this, or would you say that there is scope for even better ratio in this regard?
I think that's an expert opinion, sir. I can comment on our plans and our production numbers, but I leave the analysis to the experts.
Okay. We are on the cusp of the result of the current general election, and a new government will take office after the 4th of June. What kind of expectations would you have as one of the core players in our overall infrastructure growth story from a new government in terms of priorities for the sector that you operate in, and something that you would very keenly look forward to in the next budget?
So I think the India story has picked up a very significant amount of momentum. And with that India story picking up, the importance of the railways and of strengthening the railways has really become evident to many and to all, I would say. So all we hope for is that this focus that is now being given to the railways and to the expansion of the railways continues, and that we are able to continue serving our nation as we have done for the last 26 years.
Absolutely, and that's something that everybody will look forward to, and I'll always remember the line that we started this conversation with, waitlist free in 5 years. That's an objective that's been laid out by the policy makers, and very clearly you are playing a very important role in that regard. Let's take a look at the Titagarh stock and how it's done in the recent past as we wind down this conversation with Prithish Chowdhary, the Deputy CEO of the company. There you have it, viewers. Take a look at that performance. So there's a reason, there's a rationale and logic for why the stock has performed the way it has. And Prithish, you've taken out time where hopefully in this brief conversation, investors and our viewers will have gotten to know your company a little bit more. I look forward to doing part 2 of this maybe a few months down the line once you have more orders bagged, and that perhaps will reflect better on the stock price even further. Prithish, thank you very much for your time with us today. Viewers, we'll close this episode of Know Your Company. That was Titagarh Rail Systems. We'll be back with more interesting multi-bagger stocks in the future. I'll see you again. Until then, goodbye.